Hey friends, and welcome to getting started in our profile trading development pathway. If you are here, could be a couple reasons. Just want to check to make sure you're in the right place. One, you've likely been around markets for some time. Maybe you've had a fund in the past, or you've been a student of the market for some time, or you could just be getting started. Typically, you've had some wins. You've seen feels like, hey, I'm close, or there's some things I'm trying to figure out, but it just seems like that consistent profitability is not there yet. You don't want to be an order filler. You want to be a trader. We'll talk about the difference of those in just a second. You know enough that there are no holy grails or easy paths to success in this industry, but you also know that it's possible to be successful if you're pointed in the right direction and met that with your determination and hard work. It's likely you've been trying to DIY this or going down different paths. The hard challenge is to try to figure out what actually is helpful, what can I lean on, and what's not. So finally, you've heard or read something about profiling tools and you think, hey, maybe there's something there that you've been missing that could help you turn the corner. And that corner is toward confidence and consistency. If I have confidence and consistency as I approach markets, that's really the key outcome that allows us to express risk in a way that we can derive income and wealth. Now, the question is how do we get to confidence and consistency? Thinking through what creates confidence? How does confidence help? What's the experience when you lack confidence? How does consistency correlate to confidence? How do they inform each other? And how does skill inform confidence and consistency? I talk to lots of developing traders who will say, hey, I think I just got a psychological challenge to markets, or feels like it's primarily mental. And as I go and look at their approach, most often the challenge really isn't psychological. The challenge is a lack of confidence and consistency because there isn't skill. So because they don't have the skill to inform the confidence and consistency, then what happens? How does that experience? They experience fear. They are not confident in what they're doing. They don't know when to press risk. They really don't know that there's any probabilistic outcome to what they're trying to do. So of course, there's all kinds of mental challenges around that. That's just the felt need. But the real need to fix that is to build a foundational way of understanding the auction from a institutional, not retail perspective that they can actually lead on. Now, the challenge of achieving confidence and consistency is a fairly common one. And how do I get to generate my own ideas as a common trade, and how to build an approach that I can depend on over and over? These are common challenges. Now, as you'll see in everything that we do, we kind of look at, opportunity and risk. So there's risk. If you don't get to that consistency and confidence, or the confidence that leads to consistency, often you will experience endless style drift. Maybe you've already experienced that. Hey, something kind of worked, and I'm going to go to this next thing, and I'll go to this next thing, in an endless cycle, which is going to rob you of time. It's going to increase your opportunity cost significantly. Wasting time and money on approaches not tailored to you or your unique development needs, and it's going to leave you likely frustrated and broke. Now, the good news is, fortunately, while nothing is certain, financial markets, much like any other auction, operate in a predictably irrational way, demonstrated through consistent and repeated auction behavioral patterns. You've likely already seen some of the patterns of behavior in the auction, which is what's leading you to think, hey man, I think I'm real close. But we can leverage those to help make better trading decisions with edge. Absolutely. So it is absolutely possible. It's absolutely achievable. In fact, when we look at profiling tools specifically, it's going to help us see with greater confidence those patterns. And we do that, and we look at the profile because we are behaviorists. So a couple things just to know, if you're part of our team. So we are intraday directional futures traders. That's what we'll specifically focus on. It doesn't mean that we don't trade other vehicles and other types of trades, be non-directional, be options, be spreads. Both Jed and I have been in the institutional side and have been on the risk management hedging side. So we know all of those tools. But most traders who come to us are looking to express in that directional thing. Oh, and if you get your arms around that, then you can start moving towards those other opportunities and unique ways to create risk. But you got to have a fundamental way of understanding the auction first. And We do that as behaviorists. There are fundamentalists in the auction who look at, fundamental data, earnings statements, economic reports, and so forth to try to inform. The challenge there is that often that is priced in. Almost everything's a future. Even a stock is a future. So you get to earnings and the earnings comes out and it's like, they've already priced that in. Or, there's a Fed meeting or non-farm payrolls or something like that. And, we get there and the release comes out and we reverse because it's already priced in. Or there's technicians who look specifically and only at price action. And, they find lots of ways that works. And there are times when it doesn't. We posture ourselves as behaviorists, that essentially what we're looking for is we're looking for behavior around price. We're leaning on the edge that we saw in the floor. If you think about it, guys who were successful in the floor, whether in New York or in Chicago or any of the other trading open outcry pits, they didn't have charts. They traded off of the behavior, both of themselves and the relationship to the other auction participants who they could see. So those mechanics, even though we're all on screens, didn't go away. They're still embedded in the fabric of how these auctions work, and it's key for us to understand that. Now, we talked a little bit about this idea of traders versus order fillers. So this is a key objective also that we're going to be looking for, and one that you can look back and ask, am I a trader or an order filler? Well, here's how you know. I can place orders, but I don't know why we are in this trade. You're an order filler. I rely on others to generate my trading ideas. That's not a trader. That's an order filler. I'm in the trade, but I don't know how to identify that I'm wrong. It's not a trader. That's an order filler. I feel like if I look away from my screens, I'll miss something. That's not a trader. That's an order filler. A trader comes every day and knows why the trade is because they've crafted the trade. They rely on themselves to generate the ideas because they know the edge around that. When they're in the trade, part of defining the trade is they know when they're wrong before they place the trade. That's a trader versus an order filler. They don't mind to look away from the screens or take time off. They can come right back up and know exactly where they need to be in the auction. This was a key driver for me to develop when I started on the retail side before moving to the institutional side, but I was frustrated because I was early profitable, but I was an order filler. I was completely dependent on someone else to generate all my ideas and basically even manage my risk because I didn't know. The transition to order from order filler to trader is a key one, and it's one that you need to make if you're going to survive in this business. Now, a couple other just expectations and assurances as we get started. First, we're not a holy grail. They don't exist. We will shorten your learning curve and reduce your opportunity cost. I can guarantee that. Our process is sound. The methods are reliable. And if you do the work that we put in front of you, and you actually go through the work and the material that's available to you, the discussions and so forth, we will absolutely accelerate you around something that will work. We will help you make better trading decisions, and we'll push you. In any of the group environments or even in one-on-one, this is not a business to be sloppy. So we will push you towards making better decisions, and we believe the profits come as a result of those better decisions. Know that your greatest obstacle success will be you. We could give you everything. We're going to throw all kinds of stuff at you. We're going to throw you structure and playbooks and all manner of ideas and principles to download, and it's going to take a lot of time. It's going to feel like you're being overwhelmed by a fire hose. But the greatest obstacle success is going to be the work that you want to put in. You are the hero. We are your guides. So ultimate success in this engagement is that you're successful. So if something's not working, let us know. We're here to guide you and have you be successful. So it doesn't really do any good if we just show, how great we are, if you're not having the same success or seeing a movement in progressive confidence and consistency as we go along. That's why we're doing this. You'll have to come each day willing to participate and be transparent. If you're in this process, we assume that there's things that you don't yet know that you don't know. So it's totally okay to say that this time with us is an investment towards an outcome of your development. Please make every effort of that. And that even includes, hey, when something doesn't go well, or if you blow up or you we've all done it. We've all done it. You're not going to win kudos by holding back on that stuff. just say, hey, I took this, it was dumb. Okay, let's work around the process around that. Let's eliminate that. Let's find out how to do that. We're not going for perfect. We're going for adjustable. Okay, we can always make adjustments and get back where we need to be. And know that we will support you, even if that means encouraging you to leave trading. This is the hardest way to make easy money. It is a very attractive approach for a lot of people to try to derive income or have freedom. But it is a very difficult industry. It's a highly competitive industry. It is not for everyone. And if we go along this process, part of an objective is to learn, is this for you or not? And it may not be, and that's okay. We'd far rather you find out that this is not for you and move on to something else where you can deliver lots of value than to continue down this path and not be successful. That would be unfortunate. Okay, a couple other frequently asked questions. Yes, you need to be able to view both TPO and volume profile charts. We are platform agnostic. What does that mean? If you want to use Thinkorswim, if you want to use TradingView, if you want to use Tradovate, Sierra Chart, Edge Pro, MotiveWave, whatever manner of platform that's out there, we don't care. We're trying to help you learn how to read the auction. Once you know how to read the auction, know what you're looking for, you can use whatever platform you want. And that's actually a mark of mastery in the markets. Okay, so we're platform agnostic. Everything we discuss is applicable to any trading product because the auction is applicable to every trading product. There are nuanced differences between products in terms of the ranges they see, the typical volatility of them. For example, if you looked at the 30-year bonds versus the 10-year note, very different. Or soybeans versus corn, very different. But everything we discuss is applicable to any product, futures, equities, whatever. We'll focus on 4 specific futures products. We will not call trades. We're not a trading call service. Again, that goes back to helping you be a trader, not an order filler. However, we need to demonstrate these principles in real time. So we will demonstrate trades that you're welcome to join. And it's always fun if we pay for your investment of your time with us through those trades. So we'll talk in another video about how to do that in a way that benefits everybody. We are not scalpers, but intraday swing, multi-session, typically via options traders. We're primarily going to discuss and look at examples around intraday directional swing trades, looking for 25% to 50% of the range on any given day. Okay, so we're not looking to be in and out. This is really about kind of setting up areas of interest, know where you want to be active, setting alerts, gets to that spot, and then act. Okay, it's a way of exerting control over a market that otherwise has you can't control and you are controlled by. So it's a really great way to put yourself in the driver's seat. Okay, the place where you're seeing this video is the Pathway Hub. All the references and resources are here. This is a hub that's continually updated because we have a tilt towards continuous improvement. So there will be updates along the way. We'll notify you of those, and always trying to find additional examples that we can do to support increased learning around the ideas. And then finally, two last thoughts before we wrap this initial video up. One is the idea that success is never owned. It's rented, and the rent is due every day. So it's quotes from Rory Vaden, but I know that Dwayne "The Rock" Johnson has quoted this, and it's a great motivational quote to think about. This is gonna take work, and it's gonna be like a bell curve. Another phrase that I would say is to go slow to go fast. It's gonna feel clunky at the beginning, and that's okay. That's by design. Stick with it, and all of a sudden it'll be, like that connects to this, and this connects to this, and then you're just going to really accelerate on the back end. It's not about just accelerating you immediately to auction competence. That's not possible. It's not. Are we going to get you to some new insights very quickly? Absolutely, because we got to retain your interest. We got to keep you looking towards the next thing to get the understanding. We don't want to just bore you with theory. But know that this is a building process that's going to ultimately lead to your competence where you can rock and roll. Okay. Now, finally, as you're going along the way, we're going to talk about a poison pill. And this goes back to, hey, maybe it's not for you. And maybe the thing that we encourage you to do is to not trade, especially if we see certain behaviors that we think are self-destructive. But as you start this process, I mean, I don't know how long you've been trying to figure out markets. Some of you for quite some time, some of you are brand new. Wherever you are on that spectrum, totally fine. Let's start now by setting a time in the future where you're looking to make some really hard decisions on whether or not trading is going to be for you. And a poison pill is basically just the idea of putting a stake in the ground to say, hey, if I'm not to this degree of competence by this date, I'm gonna reset my expectations on this thing. I may just give up trading altogether. If you don't have something like that out in front of you, then there's nothing really to push you. The other part is that if you do put something out like that, it can make it very incentivizing and real to do the work that you need to do so that you avoid your poison pill. So we'll talk more about the poison pills along the way, but know that that's out there and for you. So that's it. Welcome. We're so excited for you. We really believe in the pathway and the process and the results that you'll get as you work through it. Encourage you to study hard, not try to overwhelm yourself. It will come over time. There's a lot of material here. It typically takes about 4 months to get your arms around it. So strap in and we'll rock and roll. Peace.